financial crisis. And guys, this is not clickbait. We are officially in a very, very bad situation in terms of this market. Loads going on. We need to cover off what's going on in Japan because a big fundamental shift. Crypto dumping, stocks dumping, Japanese market in a bear market. Could we be getting an emergency Fed rate cut? Oh man, this is going to be a long video. Smash the likes. Do not forget to subscribe. Guys, I was just minding my own business, doing my work, but I've got to bring you guys these updates. And we're going to start off with what is going on in this market. First and foremost, if you've opened up your portfolio, don't bother, right? 9% down on Bitcoin. Bitcoin here at 52,000 here on Bitcoin, completely just giving up everything. In fact, if you take this flash dip here on the last 4-hourly candle, this went as low as 49,000. Yes, we dipped below 50,000. Now, few things if you're waking up to this news and you're worried. One, it's not crypto specific. Don't worry that this is just a crypto specific issue. In fact, that's kind of the worst thing. It's a worse situation. It's a global liquidity issue. Now, we need to focus on what happened. If you watched my video yesterday, which you have to get caught up on, you have to understand that there's this dynamic going on where markets were already worried about a Fed hard landing. Again, please watch that video because just because the Fed were going to cut rates, it doesn't mean that the market was happy about it. Okay, so very important to understand, the market was worried. The jobs figures were bad and they're worried that the Fed were going to drive them into recession, particularly if they have to wait another 6 weeks before rate cut, because remember the next FOMC meeting is on September the 18th. I also covered off in yesterday's video that you saw a shift. Remember, I pointed out that there was a shift in that the market was now pricing in a double rate cut, not 25 basis points, 50 basis points. In other words, this is the market's way of pricing in that, guys, we're in trouble right now. Okay, we've got to keep going. Add to that another thing, and guys, you may have to watch this video twice because there's loads of stuff to understand here. Add on to that the fact that the Japanese yen is rallying. What is going on here? Let's understand what is going on with the Japanese yen. So there is something known as the carry trade. Japanese yen has historically had zero interest rates. Last week, they for the first time did their 25 basis point rate hike for many, many years. And this meant that a lot of people who were buying Japanese yen at zero, they were borrowing the yen at zero interest rates and going and making money elsewhere in the US stock market, for example, on the NASDAQ, on the Dow Jones, are suddenly facing the fact that they now have to pay interest given the Bank of Japan's increase. That has now stopped people wanting to take their Japanese yen that they were getting at 0% previously, swapping for dollars and investing in the S&P to going, whoa, let me close that Tesla trade, let me close that Nvidia trade, convert back to JPY because I don't want to be, and give it back to the Bank of Japan because I do not want to be paying my interest. Very important to understand that. You're seeing Japanese yen go up versus the US dollar. You're seeing the dollar index, which is a sign of the dollar's strength, falling off a cliff here to the downside, breaking down here to the downside, showing weakness in the dollar. So hopefully a lot of that makes sense, guys. We're in a bit of a panic situation here in crypto. You are seeing a bunch of people get liquidated, and there's been over $1 billion liquidated in the last 24 hours. Now, we zoom out, we try to understand, is this a time to panic or is it a time to just say, hang on, I need to be buying this dip and I need to persevere? Now, first and foremost, we need to understand that these are flash crashes that happen once in a while. And historically, again, I can't predict the future. Maybe there will be a doomsday one day, right? One day, somebody will say it's not doomsday and they will be wrong. It'll be the last day on this planet and they're the ones that was wrong. But more often than not, these doomsday-like situations aren't doomsday. The FTX situations aren't the end of the world. And had you have been a patient buyer, not somebody who caught a falling knife, but waited for some support and tried to establish some positions, you've tended to do okay. Now, I need to give a quick update here. Remember, I shared this flag pattern with you guys, and I said I would start nibbling here and here. Now, if we break structure, guys, that plan is out the window, right? Remember, if we break down from this pattern here, if we get this daily candle close below and we start confirming our way down, we're heading lower, 45,000, 40,000. We need to start getting ready because this is a bigger issue. This is not to do with crypto TA right now and just a crypto specific issue. This is, like I've shared, a global liquidity problem. Now, if we have a global liquidity problem, there's one thing that has always helped markets, and this could be the light at the end of the tunnel, the catalyst that we were waiting for as a crypto market. Because remember, everybody was prodding crypto and saying, move, move, move. And I was making videos like, guys, you're being ungrateful. Like, crypto sat above 60,000, 63, 64, 65,000. You're complaining? Like, you wait till it actually falls. And now we're getting there, right? So this could be the light at the end of the tunnel that maybe it prompts Jerome Powell and the Fed to have what is known as an emergency meeting. Now, if you look at treasuries, treasury traders are betting on a Fed emergency rate cut. In other words, they're going, hang on a second, this is a mess. And by the way, this is not just to do with the Japan stuff. Even without that, like we spoke about yesterday, if we just look at the fact that markets were worried about a hard landing, markets already wanted an emergency rate cut. So we could be getting a meeting by the Fed, maybe today in US hours, maybe they're going to wake up, digest everything that was going on in Japan. Remember, Japan opens first, the Asia markets open first, here in UK we open up, we get the pain, and then the US markets will open up thereafter. Maybe Jerome Powell will sit down with a meeting with the Fed, say, you know what, I don't think we can wait 6 weeks. Maybe we need to do a quick 25 basis points now, right, to get ahead of it, versus then just panicking. But even then, if they try to claim that they're trying to get ahead of it, they're already behind. Realistically, they should have cut the rates at the meeting we had last week. A lot of this could have been averted. A lot of this could be averted, and Jerome Powell has fumbled quite tremendously on this failure in terms of leaving rates too high for too long. Of course, this is now hitting us as a hard landing. You can see US markets across the board getting white. Nasdaq down 3.4%, S&P 2.16%. It's painful, and it could go on for more. Again, here on Bitcoin, you don't want to be catching a falling knife. You want to be patient. You don't want to be that guy just chasing it, saying, oh, this, we're definitely going to bounce right now. No, let the markets calm down. Let's find out what kind of directions we are getting. That being said, when you do get these flash crashes, you can't be too patient, right? So I understand, don't catch a falling knife, but at the same time, you don't want to miss opportunities. So my rule of thumb for this, when I see red days like this, I take out my wallet, and again, there's not financial advice for anybody here. You guys decide your own thing based on your own situation. I take out my wallet, and I'll just do small nibbles. And psychologically, that really helps me, because what I'm training my brain to do, and I know this is getting a bit psychological, but I'm training my brain that when markets are panicking, I'm not going to panic. It doesn't necessarily even need to be a big buy. I'm just going to nibble a bit. I'm going to say, you know what? I proved to myself with actions, not words, that when the market panics, and when Bitcoin fell last week 14% and it's falling this week another 8%, I'm nibbling. Because something happens. When you get these bounces and it goes green, it's very easy to buy here, right? These are the moments I don't want to be buying. I want to be buying when this is pulling back. And if it pulls back again, no problem, I'll nibble a little more. What I'm not doing is going, oh, this is all the chunk of change I've got left. I'm going to just ape it in, and then the market falls another 10, 15%. No. I've got a nibble, wait for it to dip a bit more, nibble. So if I've got, let's say, I know, let's pick a round number. You want to allocate $10,000 into the market, for example, when you're watching this video. Maybe as a suggestion, you want to split it into chunks of 500 or chunks of 1,000. If you allocate a little bit, wait for another dip, allocate a bit more. So at least you're stepping into the market. You're not waiting for this perfect moment to go, oh, here's all my 10K. So fundamental moment in this market right now, guys. It's painful out there. Be safe out there. Again, those of you who are in leverage, you are asking to be wrecked. You are just part of the statistics. $1 billion wrecked. Don't be that guy. Play it safe. As and when I get updates, as and when the news materializes around what's going on here, if we hear from the Fed in terms of emergency rate cut, I'm going to bring you updates. But guys, this is a financial emergency. As far as a financial global emergency goes, this is it. It could get worse. Sit out and just try to understand what's going on. Thanks for watching, and I'll see you in the next one.